Here. Hi, thanks for coming out and joining our call today. Where we talk all things multifamily. This is Eagle City Multifamily, where we purchase apartment buildings and these investment opportunities we open up from time to time to people like you and I that have a desire to invest in this type of assets. We're not currently doing new construction, but today I want to talk a little bit about new construction. Have a little article here on Wall Street Journal that gives us some charts on how the new construction is slowing down a little bit right now, and we'll talk about how that could possibly benefit the existing apartment buildings and in the future. And so before I get started, this is not legal or financial advice, simply professional sharing what we do and helping others to learn what you can learn and engage as you can. So please feel free to ask questions throughout the call, and definitely at the end, I'll be opening it up for questions and conversations around apartment investing. And so let's jump right in here. I'm going to share my screen and share this, share some facts and some things on apartment investing or a new construction. Okay, so let me share my screen. Drag this. Okay, so we're looking at the Wall Street Journal here. And this is concerning apartment new construction. Okay, so we'll go through and look at a few things that multiple people are talking about new construction. Of course, in this article, we see that new construction is slowing down. Some is simply because of higher interest rates. And the number of new apartments starting development has fallen dramatically this year, a consequence of higher interest rates, declining rents, and what in some places looks like overbuilding. So what this could do for existing apartment owners is help. If there's less new product coming online, it could help us in the future. Can you all see my screen that I'm sharing? Awesome. And so apartment building starts fell to a seasonally adjusted annual rate of 334,000 units in August, marking a 41% decline from the pace seen the same month in the prior year. Okay, so you can see this chart here. 2020 was high in January for starts. These are like new construction starts, right? So it usually takes 1 or 2 or 3 years for a new construction to be fully built and leased up, right? So we see here, if you can see my cursor, on May of 2023 of this year, it was a little higher, and then August it dropped. Like the last 3 months, it's dropping drastically on starts on new construction. And this is nationwide, right? So we're based here in the Dallas DFW area, so just keep that in mind. It's not specific to DFW area, it's nationwide, of course. And so that can make a difference depending where you're investing. We expect to see about 2 years of greatly reduced building. That's from Greg Willett, First Vice President of Institutional Property Advisors, a real estate advisory company. And so that's where this information is coming from. And falling starts come on the heels of record apartment construction across U.S. More rental buildings are expected to open this year and next than at any time since the 1980s, according to some forecasts. And I was thinking, why is that? And maybe it's because of the low interest rates in the last 2 or 3 years, right? A year or two back from now, right? The interest rates were so low that that's could be one of the factors that help increase the new construction, because the loans were easier to, or costed less. And so that crush of new rental supply is driving up apartment vacancies and causing rent growth to flatten. And so we'll go on down here to completed new construction apartments on this chart I'm showing right here. The cost and scarcity of construction financing is the chief reason builders say they can't make new projects pencil out. Banks which have increased reserves to support troubled property loans they already hold are lending far less often. Okay, so lenders are not lending near as much toward new construction. And this chart is showing the completed new construction apartments. And these are units across the country, of course. There again, it may not be specific to our area or your area. In 2015 was lower, like 250 to 270,000 units. Actually, it's 273,900 units. And today we're all the way up to, well, that's projected next year to open, right? To be fully leased up, because there's so many new apartments under construction, projected to open 450,000 apartments in this coming year, due to all the apartments that are under construction currently. So that's a big increase. Yeah, Charles, I see your comment here on the chat. That and the huge increase in rents. Okay, so that definitely affects the new construction. So this year we're projected to open 400,000 new apartment units in the year of 2023. And so these are some interesting facts. And this came from the CoStar Group and RealPage. It's where this chart came from, for your information. And so let's go on down and see what else. When they do lend, it's talking about lenders. When they do lend, they're tightening standards, and the rates they offer are much steeper. A construction loan that once came with about 4% interest now charges close to 8%. Said Lauren Brockman. Okay, that's a large developer in Denver. And developers have tried to compensate by raising more equity from investors, but convincing investors to jump into construction right now is a tough sell, in part because they can't predict how much a building will be worth when it's finished. Right, because we're in a shifting market right now. And the relative lack of building sales this year means there aren't enough transactions to make solid comparisons or arrive on reliable values. And these are all comments and reports from other industry experts as well. So are there any any questions as we go through this? Any comments? I know we have a lot of experience here on the call combined, so please raise your hand or come off of mute, and feel free to give your comments or questions. Charles, did you have more comments on the chat that you posted?
I'm good.
Okay, all righty. And so I'll go down through this. This is a fairly short article, so we'll be through in here in just a minute. And multifamily starts, that means like new construction, are falling most in places that saw some of the biggest run-ups in new construction during the pandemic. In Denver, where more than 30,000 apartments already underway, starts for new fell by 66% in Denver, right? That 43% we saw earlier was nationwide, right? So some pockets, some markets see more or less than others. But it's some interesting facts here that will affect the apartment market in some form or another. It may help us, it may not, but let's take a look at it, and we'll discuss that a little more in just a moment. So asking rents for apartments in Denver have remained close to flat in 2023, according to several metrics. It's making builders less eager to build, in other words. And so here's another apartment vacancy rate from in 2018 was about 6.5% vacancy rate. Went up to 6.75% in 2020, and the vacancy rate dropped in 21, like way down to 4.8% average. And this chart, of course, is from CoStar, the CoStar group. And so it's up to 7% now. So not a lot of variation, but that definitely affects the apartment owners. Everybody's leery that if I build today, do I get enough rent inflation between now and when I finish it, is a comment from one of the large investor groups. In the Dallas metro area, new construction has also tumbled. It says developers that expanded to untested neighborhoods are pulling back. And the primary example is on the far north side, where they're getting up close to Oklahoma, right? And so Dallas, the DFW area, is really expanding it. If you know, north of Dallas, it's expanding all the way up close to Oklahoma, like up beyond Denton and some of these high growth areas. So construction sector job openings and hirings have fallen in recent months, according to the Bureau of Labor Statistics. Starts to continue to decline. Builders and analysts say they expect to see construction layoffs increasing. And so areas that makes a difference, like where you're investing in apartments as well. Like in the primary markets, that's probably not affected as much as out in your secondary and tertiary markets, away from the main employers in industry. And the future for apartment buildings remains closely tied to what happens with interest rates. And so that's where we were talking earlier about interest rates affecting new construction. And then new construction has a delayed response, right? Because it takes 1 to 3 years to build and to fully lease a new apartment building. And then when it decreases, it'll affect years later. right? So if they stop building new construction or slow down now, we may not see the effects of that for 2 to 3 or more years later. And I think that's all of this article. And so I'm going to stop my screen sharing, and we'll talk about this a little bit more and see what you guys have on your minds around apartments.
It looks like a classic bubble. You get a rise in rents because of the COVID and other things. The interest rate's low at that point. People think, oh my gosh, I can put money in and build apartments and I can get all that rent. And then slam, they get hit in the face with the rate increase. And so now you've got many fewer persons trying to build apartments, and we will have an inverse bubble where we'll be short apartments soon. I look forward to that again because I'm a miser and I'm a Scrooge. So, what can I say? But, right now I'm getting killed a little bit on all these interest rate or rate caps or cap rate, not cap rates, but rate caps. But, that's life in the big city. It's ebb and flow.
Right. Right. That's yeah, we're investing in lots of those deals, right? So
Yes, we are.
yeah. Yeah. So any other comments? Chris, what are your thoughts?
Well, it's interesting because I've been driving around Dallas, and especially around the North Dallas area, and I could see that it's growing like hotcakes and Prosper and further north of that. So I can see how it goes as far as Oklahoma. And,
Yeah, yeah.
it's amazing.
There's a lot of new construction that way. Yeah.
My father always said he told the whole family buy land, but nobody in the family ever did. And
Oh,
it's
it would be nice to own a lot of the land up there where they're building, right?
it would be for sure.
Yeah.
But it won't do you a bit of good because you'll be dead and your kids will sell it. So that's the way it works.
Right. Long term. Right.
So, Charlie, what do you think the people are still pitching of 2x in 3 to 5 years? These people are still trying to raise the capital, right? They are still saying, "Hey, we can raise the capital," and the brokers are actually the main problem. They're misleading the operators, and then operators are painting everything on the presentation that, oh, I can do this, I can do this, I can do this. And they're trying to.
Now, I'm not going to blame the brokers on that one. I mean, there's a number of syndicators who have expenses, and they've been feeding their or paying for their expenses for the last 5-10 years quite well, telling people that they could double their money in 3 to 5 years. And so their spiel is well ingrained, but it isn't going to work right now. The interest rates, you've got to have a separation between your interest rates and your cap rates that isn't there right now. And so if you've got a floating loan, or if you got a fixed loan that's down, that's low, you're set. You'll do fine. But if you've got a floating loan and you've got to ride that thing up, you're hurting something fierce. It's just like buying a house. If you bought a house, you wanted to get a fixed loan when they were low, and if it was high, you probably wanted an arm, and then wait to refinance. But when you're doing an apartment, it's huge numbers versus big numbers. So, but everybody was scared of those yield management things, thinking, oh my gosh, I can get a better, I can get more money when I do this floating loan. And, they believe the government. Hey, I'm from the government, I'm here to help. When they said they weren't going to raise the interest rates, and it was sort of a dumb idea. And I'm in on it. I jumped into some deals because I was trying to get the tax depreciation, but it's I don't want to say I got suckered because I knew it could easily happen, and it did. So I got whipsawed. So far, haven't lost a property, but I fully expect to.
Well,
Yes, that is happening in the Houston also. But we just submitted LOI for one of the deals, all the Brett Sumrock coaches, they scratched their heads. They said, "Oh my God, how can they're asking this price?" And we did whatever is the best based on our due diligence and the Brett Sumrock. Tariq look at that one. Sean look at that one. There are some other people outside of the brand. They look at that one,
Well,
and then we come up with, we lost. It's okay, fine. We lost with the, with the 1 or 2 million under price, but I cannot go above.
I love Brad as much as anybody else, and sometimes I think he does a few things wrong, but gosh golly gee, getting floating loans was the thing he said never do this, and all of a sudden he started jumping on that because he needed to make money. He needed deal flow, and some people will change their rules because they want deal flow. I'm not going to absolve him of that problem. I mean, I think he did it. He's also the guy that says, "Oh, we never do acquisition fees," and then he starts charging acquisition fees. So, I go back too far. That's the problem. I remember the old days.
Yes, you're right. I'm not a fan of floating.
Oh
Uh,
no.
Floating interest rate. I'm not. I never
Well,
recommend people to do any due diligence on the floating,
if
because
if you're at
you
10%,
can win or
if
you can lose everything.
if you're at 17% buying a house, floating was the way to go because it might come down and it wasn't as likely to go up. If you're at 3%, you're dumber than no. You're a box of rocks if you get a floating rate.
Yeah,
Now
Uh,
and
you've
that's it.
got more money, which was the other part of it. I mean, we'll only give you, we'll give you 75% instead of 60% or something like that. So, I get the bigger leverage, and yeah, oh man, get this bigger leverage, and you get whopped on by it. So it's
I think that is what happened. Multifamily killed the construction business also. Construction killed by the COVID and the interest rate by multifamily.
yeah, but I mean, it's all political because if the government keeps spending and they have an inflation because they spent too much money, big surprise, then the Fed's job is to stop that, and they'll keep raising the rate until they can get the inflation down. But they can't get the inflation down because the government keeps spending money. It's a never-ending process. We're gonna blow the whole thing up if we keep this up.
Yeah, man. We are worried about all the investment which we did. Hopefully it will be stable and we can get our money back before they call in.
Well, you can get a lot of money, but if they blow it up, it won't be worth anything. So, it's
No,
all paper.
I agree.
Or-
I agree. I agree.
and I'm not a gold bug. I don't own gold, but holding the apartments is probably the thing. They may be bringing you chickens when they pay their rent, but you'll get something.
Yeah, that is what I'm saying. People just don't forget about anything right now. Just just stay where you are. Do not distribute anything. Just stay for a couple of years, then everything will be fine.
I want to change the thought just a little bit here now and ask a question. And all of you are welcome to answer the question or not if you don't feel like it. But about concerning investing in apartments, if you were going to invest in an apartment deal now in this environment, would you go for more cash flow? Or would you go for larger total returns on a 3 to 5 year at sale or at refinance? Any thoughts on that? If you had the funds to invest and if you like the deal,
Yeah.
which way would you go? What type of deal would you look for?
I would look for cash flow because your IRR goes up if you get your money back faster. I mean,
Okay.
if you're saying there are two deals, one of which is going to, and the total return is the same on both deals, your IRR is better on the one that returns your money faster. So, and
Okay.
that's where you should make the comparison. But, do you believe those two fellas? I mean, you're making the bigger assumption is, can these two jockeys ride those horses well enough to do what they say they're going to do? And then you say, well, there's a slight advantage or safety factor in getting my money back sooner, but he may blow it up either way. So it's still taking a pretty good chance.
You're right. It's definitely a bigger bet on the operator, right?
It's always
But
on the jockey.
that's a great answer as far as cash flow. You get your money back quicker and your IRR goes up, right? So,
Yeah.
Chris, anyone else have a thought on that?
But not all the people are offering cash and cash in first year. Most of them are saying we would like to be under promise, we would like to keep it, and then we would like to go for next year. Right?
Um, well, it was his hypothetical. I was going by his hypothetical, but no, I haven't seen those two deals that I can compare to one another. I agree with that. And you know, right now I'm not investing because I'm not making anything, nothing's selling, and I have to live, eat. So I have a bucket of money to eat on, and I'm not letting that out of my pocket because my wife will kill me.
Hey, Herb, we just lost one of the investor, man.
What would oh yeah.
You know, if I'm complaining or at least commenting, because it's not really a complaint, we've got a property and it's got its third deal and they just reneged or backed out of not the same people, so it's harder to say this, but this property has had 3 contracts on it, and in each case they have backed out just before the money went hard. The last one they might be owing us hard money, I'm not sure. So I'm waiting to hear on that. But in any case, you know, it's been a little frustrating in that they keep telling me it's going to sell, but it hasn't. And I got 2 other deals on the market, and I don't think, let's see, one of them has had something back out on it and the other one has not. So it's real common for people to put a deal in and then start retrading. And at what purpose is that an advantage to me? Because they're retrading my profits. They're not retrading the lead's profits. So
Right.
I think things the formula has to change a little bit, right? The investor need to get paid first before the operator will get paid.
well,
Acquisition fees need to be changed and reasonable. Should not borrow. I should not make money until my investor will make money, regardless of anything.
tell me about acquisition fees if you're going to say that. You know, let me just challenge you on that one. All of my deals are straight percentages, you know, 80/20s, something like that. So we rise and fall together. But the ones who get an acquisition fee, they're happy and they move on without me getting a cent. So
that is, I think, need to be changed, because then you will get more trust from the investors, and you can leave it the money over there, and then you can take it out. It's your money. If you prove it, 90% what you're saying.
you know, the only choice I have is to take the deal or not take the deal. They build the con or the PPM and the operating agreement the way they want to do it, and I get the choice to say yes or no. That's all. I don't get to negotiate terms.
Yeah, but Charlie.
But there's a huge number of people out there, so all they got to do is find 50 dumb doctors, and they don't need me. It is an ocean. I can take my teacup and say, no, you can't have my little water, but they still got an ocean out there to go dip water out of. So, I can make my stance, but it's, and I will do it. It's better for me if I do, stay out of the ones that aren't good. But
Charlie, I met with the doctors, some of the doctors, they are not dumb. Frankly speaking, they already know about all these formulas, everything. And they can really, scratch out all the numbers, everything. They know how much we are making as acquisition fees, everything, and they try to negotiate over there. But as well as they can make 2x, they have no problem. But if they don't make 2x, yes, then it's a problem.
Well,
and we abuse them, spoil them to make the 2x in 2 to 3 years.
Well, it's always been 3 to 5 to me, but I like having it done in 2 to 3. I agree with you, but it's you haven't talked to every doctor. You've talked to a set of doctors that are wiser than perhaps the average set of doctors are. You know, and I'm only picking on doctors because those are easy, but there's always, you know, when I go into a, you know, and I'm a Bradite, but when I go into that big meeting where he's sucking new people into the deal, there are people that are wowed by it. And, you know, it has worked for me wonderfully, but is never guaranteed. And some people don't realize that not guaranteed part of it. They think it's going to be good. I watch them where they pay Brad the big bucks to get on that, to get onto their personal mentoring, and there'll be, you know, 200 people that'll pay him that in one sitting, and he did 60 deals last year. And I'm counting on my fingers going, well, that means you bunch of you better get on the deals together, because there's only going to be this many deals. And, you know, this year there's probably going to be 20 deals or maybe 30, but it's not going to be the 60 to 100 that we've had in a couple of the big years. But there's still so many more deals than there are mentees, that it just floors me that people can't count and figure that out by looking at it.
Right.
It's a wonderful deal if you are driven the right way and you have a little bit of luck, and maybe that just means you work harder, but gosh, or you know the right people. But gosh golly gee, it takes some technique. And I mean, there's a bunch of people that are doing really well at it. But I've known many a guy who's gone, he's just given up and been a passive like me after, you know, trying to be a lead, because it doesn't click, and it's a little hard for it to click.
Yeah, it's definitely worth your time to vet the leads and your partners
Yeah.
right before you go into a deal. So anything else, Chris?
Yeah.
Anything before we wrap it
Yeah,
up?
I have a question.
Go
My
ahead.
question is, how comfortable you are in a deal where the sponsor is not putting any of their money into the deal? Would you be comfortable in putting the money in that deal?
No. And keep in mind, if they're saying we're going to put $500,000 into the deal, there's, you know, 3, 2, 1, ever how many leads there are, and the acquisition fee is $1 million, and they're putting a half in, they're not really putting a lot of money into that deal. There's no skin off their nose, if you see my point.
Right, because they're getting it all back.
Yeah, I mean, they're just putting your money in the deal for them.
Yes. So would you be comfortable in doing that deal, or what should we do?
No.
No. Okay, that's a good answer.
No, it would be there's a rare possibility. If a lead has been so successful that he would essentially be replacing some other passive, if he put some money in there, I might take that into consideration. But I would still rather him have some skin in the game.
That's right.
It's a great answer. Thank you, Sanjeev and Charles, for that. Any other questions before we wrap it up?
You all day. Charlie, you give the answer which we are looking from long time right now.
Well, just keep in mind, there's just one man's opinion, and I'm full of something because I got brown eyes. So take it.
Yeah, but
it's worth what you paid for it.
Yeah, but you have Excel file, man. I am impressed with your Excel sheet. The first day when I met with you, you showed me the Excel sheet. And that is the formula I'm using right now.
Okay. There's a woman on another call I'm on, and she's writing some way for a person to manage their multiple properties. And I'm thinking, well, okay, I may have to change, but I'm thinking, I don't know what she can put into it that I don't already have in mind. So we will see.
All righty. Okay, well, it's been a great meeting. Great meeting you guys again, and see you next week.
Thank you, guys.
Thanks.
Bye.